as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
So taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is, so let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Rachel.
Thank you, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I'm wondering if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters, for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised in a timely way so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Steve.
Chairman, thank you. Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle, that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which talked about, the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. Of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to build liquidity. And you asked about the separation principle. Like so many things, it's very useful. But ultimately, it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities. And at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Good, Victoria.
Hi, Chair Powell. I wanted to ask, obviously, with the recent bank turmoil, we've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law as it goes to the least cost bid.
Colby.
Thank you. Colby Smith with the Financial Times. At the March meeting, you mentioned that a tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. When we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other. Although firms are trying that, and we're trying it, but ultimately we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, a sufficiently restrictive stance. But I think conceptually, though, we think that interest rates, in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors. That's the way we're going to be thinking about it. That's really all we can do. As I say, it does complicate. We have, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now. But nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting. And that's, we're just going to have to, before we really declare that, I think we're going to have to see data accumulating and make that, as I mentioned, it's an ongoing assessment.
And a follow-up on credit, if I could you give us a sense of what the SLUS survey indicated? It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLUS on May 8th, in line with our usual time frame. And I would just say that the SLUS is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Nick Timmeros with Wall Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last two meetings, been seeing the effects of those moves, why did the committee feel it was necessary to keep moving?
Well, the reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time. And, that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So we really, we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't, with economic data, you can't. You've seen, take inflation from it. Look back. We've seen inflation come down, move back up 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that, that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably that you can calculate in many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest-sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
But would you be okay with a prolonged 3%?
Let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're going to need to stay at this for a while.
How does the other side of the mandate, the job side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation, is, running high, well above our goal. And right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
Hi, Chair Powell. Matthew Bosa with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems that to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet, wages have been moving down. Wage increases have been moving down. And that's a good sign, down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in expansion. So. Yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that, if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time. By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that, that wages are really the principal driver, because I don't think that's really right.
Great. Chris Ruge, Brad, Associated Press. Well, you mentioned profit margins. Those have expanded, did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So
Yo, what's going on?
It's good. Can you hear me?
Yeah, I can hear you.
I think you will see.
You talking?
I'm not talking. No, I was waiting. I have no idea what's going on. What are we doing? Is this a watch party?
No, I mean, I was watching. Yeah, I was watching to see what he was gonna say, and then I'm looking at the Bitcoin chart right now, seeing if we're going to dump or pump.
Yeah, I think overall we're gonna pump, but let's see. I'm always wrong when it comes to TA.
Yeah, because we're dumping right now.
You're much better at looking at the ribbons and understanding what the ribbons are saying than I am. I just buy Bitcoin and shut ridiculously wealthy. I don't know how to read the ribbons.
You don't fuck with the ribbons?
It's not they don't fuck with me. It's not that I don't fuck with the ribbons. The ribbons don't fuck with me. That's my problem.
You're so funny, bro. Yeah, we're dumping right now.
Yeah, don't worry. Wait until he finishes talking.
Yeah, I know, right? But he said we're looking for 2%. Oh shit, 2%, bro.
How do I share this? Is there anyone actually watching live with us?
We're streaming on YouTube and on Twitter, so I'm not 100% sure.
All right, give me a second. I'm going to retweet it. I apologize.
You're in your Tesla?
For the next 3 weeks, I have to do my retard nerd activities because I have a Tesla for a month.
You don't like the Tesla, bro?
I hate this shit. I hate this shit. Look at this.
Bro?
Which nerd sits here and watches this thing charge for 30 minutes? Like, who does this? Like, which morons are doing this?
So you don't like the charging aspect of it? I never really thought about it.
I don't like the charging aspect. I don't like the fact that when it is fully charged, it only has 250 miles on it. I don't like any of it. Like it's all a bunch of bullshit as far as I'm concerned at this point. If this took 15 minutes and I had 500 miles, like my gas guzzling Mercedes that I had before I moved out of the UK, it would be fine.
Gas guzzler. Was it a V8? V6?
No, I'm not. I don't really know. I'm not a car guy. I don't really know.
Okay. Yeah, bro, we're dumping right now, bro. We're a dumpski.
What's the link to? Is it the same one?
What link for what?
Just if people want to come and talk.
Oh yeah, if they want to come in and talk, yeah, it's the same link. You can share that link.
Okay. Yeah, no, I'm very, very frustrated with a Tesla. I don't know which nerds at this time. I'd have to employ somebody to make sure this thing is charged up. And then I got people on the internet telling me that, oh no, it's because you don't have a charger at home. That's why you're not liking it. because like even they know, even they know, even the people that love this thing know that they don't want to be sitting here for 30 minutes waiting for this stupid shit to charge. I feel like I would get a Tesla if I was married because that would give my wife something to do.
Yeah, I can agree with that. And like I said, I like Teslas. I wouldn't buy one yet. I don't know if I'm gonna buy one. I've had a change of heart on Teslas. I had a change
Yeah,
of heart on
worth it.
Teslas, bro.
You what?
I used to love Teslas, but now it's like I don't know, man, because all the fossil fuels that go into actually building a Tesla and like all the mining and all the shit that they have to do to get cobalt and to get lithium and to get all those materials to even build the battery. It's like, yo, y'all are super counterproductive, and they fucking pitch and talk shit about fossil fuels, but they're using fossil fuels to get it over here, and they're destroying the environment to get the battery. It's a contradictory fucking industry, in my opinion.
Yeah, I mean, look, at the end of the day, you've got to decide how much you give a shit about all of that, and I just don't.
Yeah, I don't either.
So it's I care about my Bitcoin, and what I do know is that I much rather, the one thing I do love about the Tesla is when you put your foot down, this thing is a rocket. No matter which version you've got, you put your foot down, that power comes instantly. But you Americans are used to bad quality things. You Americans are very much used to sitting in cars with this vegan leather bullshit that
He
does
said vegan leather.
and fake wood and shit like that. I'm used to Mercedes Benzes from Europe, right? We have real leather in cars. We have real wood in cars. Like this is what I'm used to. And a car that looks like a chariot. And this doesn't look like this. Looks like an iPhone with 4 wheels attached to it.
I actually like I like Benzes, but I like BMWs a lot.
I like BMWs too. Again, another fine German vehicle.
Absolutely.
But I think I want to, once I find a place where I want to live for a longer period of time, I think I want to get a Porsche.
Hungary? We out?
I don't know. It depends. If I can find a Hungarian woman that wants to have 4 kids and not pay any income tax, that way I can have 4 kids. I can have 4 kids and put all of my income on her name.
That's a lot of kids, though, bro. Why they had to do 4, bro? Why couldn't it be 2 or something?
Because the world needs babies. That's why it's a serious problem.
It's an abundant amount of babies.
There is not. We need more.
We do need more.
If your Democrats would stop killing babies, then America would have enough babies. Apparently, you guys don't want to stop that. What did I say? What did I say? That was a lie.
No comment. I'm not gonna comment on any of that, bro.
What I said that was a lie.
That's the land of the free, home of the brave. You can do what you want.
Land of the free. Okay. Free my ass.
He's so funny, bro. Yeah, man, we dumping, man. We dumping. Can we get a bounce? I don't think we're gonna bounce anytime soon, bro.
Did anyone join? Could I be able to see if anyone joined as well on this software, or no?
Yeah, somebody did join. Mac is in the house.
Who's that?
I don't know. Somebody that requested, and then we got G. We got a bunch of people in here today.
There you go. Everyone's too shy. Listen, if I can turn my video camera on while I'm being a nerd charging a fucking car, anyone can turn their videos on.
They came in.
I don't know if they know that we can hear them.
Ollie, Mac, they should know. We had 2 other people in here, but
listen, I think that what's happening to price action right now? Let's see. We're dumping. We're down 1.5% ish. Stock market's down, and the 2-year is down. Okay, interesting. I think we're at par interest rates. I think we're there. Like, I don't see this getting any crazier.
Ollie, you're up. No, we can't hear you. We can see you talking, but we can't hear you. You got to connect your mic. We got a low bounce. Got a little bounce right now. Baby bounce.
Oh shit!
You sharing your screen?
No, I was just trying to mess around with the video settings on this thing.
Oh.
Yeah, listen, Chris, don't ever buy an electric car.
Yo, I was definitely about to buy one. But like I said, I have a charger station right down the street from my house. But
so do I.
I didn't know it was going to take 30 minutes, and that's definitely going to seem like a concern, if you got shit to do and you got to sit there for 30 minutes to fucking to charge up when you can just pump gas in like 5 minutes, if that.
5 minutes and you're out of there, Yeah. This is for the virtue signalers. Because in a real world, like, you're not going to put your foot down to try and race a Ferrari, right? Like, this Model 3 is faster than a Ferrari off the line. But in the real world, you're not doing that. And more importantly, whoever's in the Ferrari sounds cooler.
That muscle.
You can hear that engine roar. Like, I pulled up outside the cigar lounge in this Tesla, and then a guy pulled up like minutes after me in his Porsche 911. And I'm just like, I don't care. Take this car. Like, I want that engine. I don't care if it's slower. I don't care anything. Like, I want that engine.
We can hear you now, Ollie.
Fantastic.
What's up, Ollie?
Hey, British. How's it going, man?
Fantastic. How are you?
Good, good. I didn't go to Harry Sasson, so I went to Lille, as I told you. Great place.
Yeah, Leo. I've never tried Leo, but next time I'm in Bogota, I'm gonna try Leo. Harry Sasson has to be. It's probably one of my favorite restaurants in Colombia, if not my favorite.
Oh yeah. Oh, maybe next time then.
Where are you now?
I'm in Playa del Carmen in Mexico right
Oh,
now.
okay. Cool.
But I live in Miami.
Cool. Oh, Chris lives in Miami as well.
3 hours from Miami.
Yeah, whereabouts is that?
I love Playa del Carmen. That's crazy. That's one of my favorite spots to travel to.
Yeah, it's a good place. I like it.
Oh yeah. I'm considering moving down there. It's either there or El Salvador.
You ain't ever gonna leave America, man. Stop pretending. You're not ever gonna leave America. Come on, why are you lying to yourself
Bro,
and
I'm about
me?
to slide out. Even my son knows. My son be like, "Yo, Dad, you still gonna leave?" I'm like, "Yeah, I'm sliding out. You coming with?"
He's been talking about it for 3 years, ever since Trump lost his election. Come on, you ain't never gonna do it.
I've been trying to leave way before that, bro.
Americans are never gonna leave.
Yeah, I'm not American, so I can leave anytime. So
Where are you from? Where are you from? What's your citizenship?
I'm a dual French-Australian.
Okay, cool.
Okay.
Yeah, no, Americans are never gonna leave. Americans are within a prison with no bars and think they gotta sit inside it.
They definitely got the prison. They definitely got people locked in this bitch with no bars.
It's like you'll be thinking about leaving, making all the plans, and then you go to a gun range and be like, "No, I want to be next to my guns. Like I can't leave. I have to be next to the guns."
And to be next to the guns, that freedom, you know. I don't. Are you allowed to own guns in the UK?
No, of course not. And
No.
we're just a civilized country.
Oh yeah, that's why y'all be shanking motherfuckers, right? That's why they got all them stabbings.
I love winding up Americans because I'm pro America more than a lot of people. But I love annoying Americans when it comes to the Second Amendment gun rights. It's like, okay, cool, I get that. And the only thing people can come back with is, well, we wouldn't be having the stabbings if you well, it's like, yeah, but you got to fix the mental health issues first. Fix the mental health issues. Do you know how many mental health issues get created just as soon as you get an American passport?
Hey, at least we're down in stabbings this year, okay?
Yeah, because what are you up in mass shootings? I get it. I get having one gun. I get the idea of I get the idea of having a gun, right? Like I completely understand that and I support that. But 400 of them for one guy in the middle of the field?
That's right.
Automatic?
I need my rifle.
Just in case the attacker's whole family shows up, you're gonna take the whole lineage out?
You gotta take them all out, bro. Just go big or go home, dog.
You ain't ever leaving America. You might as well stop mentally masturbating about leaving America.
Bro, I'm sliding out this bitch, bro. When Bitcoin goes to whatever I need it to go to, we howdy.
You're not ever gonna leave because you're gonna get there and go, I want my guns. I want my freedom.
Well, I was making the point that actually, one of the amendments is the rights to bear arms. And I saw that Bitcoin is actually, it's a modern arm. It's a new weapon to fight against high-level stupid politicians and policymakers that are screwing us up. I don't know that you guys thought about that in that way.
Just say that again. Just say that one more time.
So in one of the amendments is the right to bear arms, right?
Yeah.
So it was written by the founding fathers. Okay, so an arm can be anything, right? And back then there was no rifle, there was no semi-automatic. But people can start seeing Bitcoin as an arm or weapon against those that are actually, screwing us up economically.
In the court of law, how would you define Bitcoin as an arm? How would you define that? How would that be? How would you defend that?
Well, that's that you defend yourself. You hold on that to not be the prey of policymakers and large bankers that take a cut everywhere and that screw you up. So that's a defense. It's an economic defense. So there's a new way to seeing that. It's not just to physically defend yourself, but to defend yourself economically. So I think that can actually be seriously placed forward because the language is very broad on the amendment. But that's my point of view, and
well, this is what Major Jason Lowry's entire thesis is about. I don't know whether you've read Soft War or not, but
actually, I did drop that in one of his message like a year and a half or 2 years ago, seeing that as it's a new arm, it's a new weapon against whomever.
Yeah, absolutely. That's why nation states are going to have to adopt it.
Yeah, potentially. Well, we'll see how it goes.
And the best thing that we can do to get, for me, for example, if I have to look at it and go, if I want the world controlled by a particular nation state power, right? And there's always going to be a power at the top. I definitely want it to be a combination of, American military and British financing, right? I definitely want that over China and Russia, for example, right?
Yeah. Yeah.
When I look at it like that, the fastest way to do that is to make America believe that Bitcoin is a weapon, because then every American will say we need to get as much of it as we can. So I think it's I think that's why I support what Jason's doing when he talks about soft war. And I think it's going to bring a lot of people into it that wouldn't have been into it before.
Yeah, well, we'll see how it goes. I don't understand the beef he's having with a few other Bitcoin people. Not following everything, but it doesn't matter.
Well, Chris, why is your idol has moved to El Salvador because he's now the consultant to the president. I think he's done a fantastic job. Why does Max have a beef with Jason?
I was definitely about to say that. I don't know what the concern was. I saw the tweet, but I didn't listen to the entire spiel that Jason had. Can you find the tweet, or I can find it and probably pull it up and see?
It was a whole series of tweets.
It was a video of him talking about something specifically that Max tweeted about. It was about he was in his uniform talking about something.
Yeah, I think Max is upset that Jason is talking about, Bitcoin being used as a weapon versus, Max's peaceful perspective on Bitcoin, which is kind of interesting because, they say Bitcoin is supposed to be for your enemies. And then, Bitcoin maxis, we are the first ones that will start cussing out people for having a different perspective on Bitcoin, which is quite interesting.
So do you agree that Bitcoin's a weapon, or do you think Bitcoin is peace?
I think Bitcoin can be used as a weapon and it can be used for peace, just like a gun, right?
Yeah.
A gun can be used for peace and it can be used as a weapon. And so I think everything is the intention that you put on it. Now, the beautiful thing about Bitcoin is that you can't just, materially increase the supply of it to utilize it, to incentivize people to utilize it in the way that you want them to. I think that's the difference.
I gotta pull up that tweet. Man, because I don't even know. I didn't even get it.
It doesn't matter. We need more people to discuss the spread wherever they are, rightly or wrongly. We need more people to consider and study Bitcoin in general. So their beef is personal. I don't really care.
Yeah,
it's an interesting angle anyway.
I want everyone to discuss Bitcoin. I don't care what your perspective is. If you think Bitcoin's going to increase the amount of traditional families and increase the amount of children in the world, I want you to discuss Bitcoin. If you think Bitcoin is going to inspire people to chop their dicks off and become trannies, I want you to discuss Bitcoin. If you think Bitcoin is going to end the world, I want you to discuss Bitcoin. The best thing for Bitcoin is for people to discuss Bitcoin. I don't care what your perspective is, just give your perspective on Bitcoin.
Absolutely.
Whoa. I agree. You can do whatever.
I'm having too many fights with my wife about that. She's got she doesn't really share my passion for it, but she's new to the game, so yeah. She's old school finance also. It's gonna take some time.
Oh, sorry to hear that.
It's all right. It's all right.
I thought about that actually. I let me ask you a question, right? How important is it for you to have your wife be interested in Bitcoin?
No, she's interested. She's interested for sure, and she works in fintech and banking, so she's across all this crypto stuff on a regular basis. Definitely. But I think it's the novelty. She will catch up eventually. It's important because I love her, and I want to make sure that at least we have a productive conversation, not a fight. So that's the other part. But after a few drinks, everybody get excited. So,
No.
But it's fine. I mean, at the end, that's my Bitcoin. That's my money. if we divorce tomorrow, which it's not going to happen, hopefully not. Well, I'll take my kids with me. There's no one is going to get away with that. It's mine. So it's good in that way.
What if your spouse, just in general, what if your spouse rejected Bitcoin? Would you still?
Well, I don't know because it's not the case.
You don't know. British, is that something that's a deal breaker for you? Is your wife must be a Bitcoiner?
I was thinking about this because my ex-girlfriend was like a super fanatic on Bitcoin. Like she understood Bitcoin a lot longer before I did, right? In our life journeys. And then the more the relationship went on, I realized that wasn't really important to me. So if she rejected Bitcoin, I'd be like, that's absolutely fine. What's for dinner?
So the thing is, I do the cooking a lot, so I can't really let her handle that part.
So at least she's coming around to Bitcoin, because if her cooking is bad, if her cooking is bad and she's not coming around to Bitcoin, that's a real problem.
I think it's a deal breaker for me, because if you don't understand the fundamental and the basis of money, then we ain't got nothing to talk about. Whether your cooking is good or not, if you don't understand money and like how important and how it's really the determining factor of like everything in the world is based on the money. So if you don't understand that, then I don't know. I think that's a deal breaker.
So
I agree with that. There's also people have been like, think about it, for 30, 40 years, all you heard is this is how money is. This is how things work. Everything else is an ideology. It's very difficult for people to think about the future, which is different, with a big technology that changes everything. It's difficult. So, and you've got the biggest challenge is nation states adoption. They will do whatever it takes to remain power, to gain power, to keep that under their hood, and that's a reality. So there's a part of the world that's like, well, if one country like China has 1.5 billion people, they cannot reach Bitcoin. Well, it's already 15% of the world. You do that with India, and then you reach 30%, 35%, 50%. How do you want to gain adoption when 50% of the world is banned? So it's gonna, I know it's not impossible for those people to access it, but governments are very good at brainwashing you, and they threaten you to do whatever or they don't like. So yeah.
Chris, I need to join from the other stream.
You want to use the other one? I got you.
All right, appreciate it.
Yes, sir. No problem.
Can you hear me?
Yeah, I can hear you.
The question I wanted to ask you both, actually, I completely forgot while I realized my phone was about to die. So I'll have to come back to it in a second. Oh, the brainwashing part. Yeah, so the question that I had was, if your significant other completely trusts you to manage the finances of the relationship, is her understanding of Bitcoin actually important?
Wait, can you repeat?
If your significant other, your wife, trusts you to manage all of the finances of the relationship, is her understanding of the finances actually important?
Oh no, we share that responsibility. So I share my finance, she share her finance, and we've got a joint account. So
Right.
there's no very separate on that way.
Right.
Yeah, and I'm not disclosing whatever I have either. It's too early.
To her?
Some people have. Yeah.
How long have you been married? If you don't mind me asking, that is.
3 years.
Okay. Interesting. What about you, Chris?
I think that's a great observation and a great point that you're making there. That's fine, you know. I guess you're right. If she trusts and she understands, like I said, she just has to have an understanding. If she's just oblivious to what Bitcoin is and oblivious to what's going on in the society, then that's like the antithesis of what I am, you know. So she would have to have some kind of knowledge, you know. She doesn't have to be pro Bitcoin like a maxi like I am, and like be online and be on Twitter talking shit to everybody on Twitter, you know, like how we do. But she just has to know about it, you know.
Oh, I can't stand that shit. Have you seen how many like quote unquote trad women are on Twitter acting like men, shouting at other people? It's like, come on.
Who are you talking about, bro? Who are you talking
There's just
about,
so
bro?
many. There's just so many of them. It's hilarious. It's like the most foul-mouthed women, and they want to put pictures of their titties out in a summer dress and say that they're traditional. It's like, okay, all right, I see. Maybe I'm just maybe I don't know. I don't know, my friend. I don't know.
I like when the women get on and talk shit. It's just she doesn't have to, and as long as she's not. I don't know. You got to give me specifics because I'm trying to figure out who you're talking about right now. Because I know there's a
No,
couple.
there's so many of them. Like there's so many. Any woman that starts talking about that she's a traditional woman and she's a traditional wife, but then the next post you see is her insulting someone in public with a foul mouth. It's like you don't get it. Where did the traditional knowing when to shut the fuck up go?
Well, maybe she was defending herself. You don't like a woman defending herself?
Hell no, that's my job.
No. Well, if she's single, then what?
Well, if she's single, she should focus on learning how to shut the fuck up so she can attract a man. Listen, how do I do this, right? Look at what's going on here. This thing is like completely turned off. How do I turn this on?
You speaking to someone that does not own a Tesla, my boy. So I don't know.
Hold on. Let me see if I open the door. Oh, there we go. All right, you open the door and it comes to life again, apparently.
You're a boomer, bro. You don't know how to drive a Tesla, bro. You're a boomer, bro.
That must be it. That must be it.
Are you in London?
I am, yeah. I'm here for a few weeks.
What's your name? What's your first name?
Sorry?
What's your first name, if I may ask?
My first name is British. My second
Right,
name
okay.
is Holly.
Right, okay. Do you have a first name that's other than British?
My first name is British. You don't like British? I think it's pretty cool. Chris, don't you think my first name is pretty cool?
I think it's absolutely splendid.
Yeah.
Splendid, mate.
Splendid, mate. So what's happening in the markets? I can see the charts going crazy.
Yeah, so I'm looking at this. It looks like we are still coming down, but we have bounced a little bit. Let me look at the. Let me look at the 10-minute chart. Looks like
What's the ribbons saying? What's the ribbons? Tell me about the ribbons.
The EMA ribbons, bro.
I don't know what ribbons you'd be looking at, but tell me about the ribbons.
Hey, the ribbons don't lie. We're under the ribbons right now, so it's not looking too good. Not looking too good right now. Money flow is red. That's not looking too good right now. Momentum is down, but VWAP is pointing up, so that's
the what? The V what?
VWAP. You should know what VWAP is. British.
Listen, I don't know what you're talking about.
You don't know what VWAP is?
VWAP. Listen, wasn't there a Cardi B song called VWAP or something like that?
Yes, there's WAP.
Is that what we're talking about right now?
Absolutely not.
Right. Okay. So it's not about okay. Now educate us on what VWAP is.
It's like the average that the asset. It works a little bit better in my opinion with stocks, but it's pretty much the average of what a asset is trading at.
Okay.
All right.
VWAP. Well, the way that they're using it in this particular, like it's usually on the chart, right? But for this, I don't know if you can see it. It's on this money flow, which is market cipher, which is new. It's not new. It's actually a bunch of indicators that I use when I trade my little bag, right? And they use VWAP as a indicator just as far as direction goes of the asset. So it's different how they use it in market cipher versus how the traditional VWAP is, because usually the VWAP is usually on the chart, and whenever the price goes to the VWAP, it usually rejects or it goes above, and then it's like the center point pretty much of where the asset goes. Just the average price of the asset. But like I said, it's different on market cipher.
Hey, Chris, what year are we in?
Pardon me?
What year are we in?
2088.
Listen, last time I checked, it was 2023. And right now, I'm looking at a grown-ass man still wearing a face mask.
Bro, I was walking earlier today on my walk, and I saw some dude at the bus stop, and he had on a mask, and he was by himself. I'm like, bro, people still wearing masks, bro. It's crazy.
Done with the United Kingdom.
Which part of London are you, British?
I'm in central London.
London.
Sorry?
Are you from London initially?
Yeah, born and raised in London.
Right, okay. I spent a couple of years in West London, in Ealing. I was based in Ealing, and I used to work in the city.
Nice.
Yeah, except for the weather. It's terrible weather.
Well, there's a whole list of things that are awful about London. Weather is at the top of it. I agree.
Exactly. No, you've got the pubs. The pubs are amazing. I like the British pubs. They're great.
So the only good thing about the United Kingdom is that we have pubs. That's not good. This is not good. This doesn't make me proud to be a Brit. Like, we used to run the whole world.
Well, you used to have the Queen too, but she's gone.
I know. Tell me about it. It just keeps getting worse and worse by the year.
Oh man, you're gonna get a king soon. The coronation is happening this weekend. This is why you went back to the UK for the coronation.
That's right. Yeah, that's exactly why I had to come back.
Anyway, so anything Powell said interesting? So just rate
Chris
hikes
is
as expected.
watching that, not me. Chris, what's
Nothing
going on?
else?
I didn't hear the question.
Anything else that Jerome Powell said that's interesting, or just?
I mean, I was listening, but he just said that he's still trying to get us to 2% inflation, and he's going to continue to tighten up on the fiscal policy. So that's all I heard, and then we dumped, and he's not on anymore, and I closed the live. So
no posing or anything. It's the same bullshit.
Yep, typical Fed bull. But right now, we'll see how it goes. I don't think we'll get to 2% inflation, but that's what they keep claiming.
Yeah. Oh. Yeah. When is the next meeting, the FOMC meeting? Is it next month in June?
British would know more than I would.
I was talking without unmuting my microphone. Yes, June.
June?
Yeah.
Well, what needs to happen? How many other banks needs to collapse before we can pose the rates hike at least? That's a good question. I don't know.
That is a $1 million question.
When are we going to see the first sign? I mean, we're seeing that in the US. There's definitely a recession, like jobs are down. But when will the Fed be able to see that in their charts? And that could be an indicator of a pause. I don't know. Do you guys have any idea how long it takes so that the recession can be seen in the numbers?
Yeah, they will always have a lag time, and that lag time is 12 to 14 months.
Right,
So
from
we're about to start 12 to 14 months from the first hike. So we're about to
so it's
start.
March. We're gonna see that next FOMC. Okay.
Yeah, in the next few months we should start seeing that.
Yeah, I'd love to see that. I'd love to see like what's fucking unrealistic is like all around the world the like real estate market hasn't crashed. It's in the US, it's more or less stable, didn't decrease that much, and that has to go. That's one of the things that's I see that has to go. So it's getting so fucking expensive.
I agree.
I don't know, Chris, what do you think about that? You're in Florida, Chris, right?
What was your question?
Yeah, you're in Florida.
Oh yeah, I'm in Orlando.
Yeah. The real estate market is still like super.
Still booming. It's definitely come down a little bit, but it's still people are still a lot of people from up north and out west are coming here.
Yeah.
So it's always going to be an ideal place to live versus New York, especially, and also
Yeah.
California, especially. But I think a lot of people in Cali are more migrating to like Texas, a little bit closer. But I think New York and a lot of the northern states, a lot of people from up north, Jersey, come down here, so
Yeah.
always going to be a booming market for real estate. Oh, speaking of real estate, British.
He's gone.
Oh, he's gone. Oh. He was saying something about real estate earlier in a tweet. So
Right. Yeah. Because you've got so many people holding on their purchase, on their real estate purchase during COVID, that they don't want to sell because they want to make a profit. But sometimes you don't make money, you lose money.
I've been telling everybody that I know that's in real estate as a recommendation. They probably should have. I mean, right now is not the best time to obviously refinance, right? So they could have cashed out refinance before they started doing all this rates hikes and stuff. But now I've been telling my friends to like sell now, and I don't know. I think there's going to be a real estate crash, but we'll see.
Well, I'd like to see that too, because with the recession, there's going to be defaults. People are not going to be able to pay their mortgage for sure. And the rate increase, meaning that it's getting more expensive just to own a house and to maintain it. But I just want to see the crash, and I don't want to see that like taking forever. It's so annoying. Even Jeremy Siegel, remember? You know Jeremy Siegel?
No, I have no idea who that is. Siegel, the Seagulls that own Westgate. I can't hear you.
Oh, sorry. Yeah. Jeremy Siegel, he's a professor at Wharton at the University of Pennsylvania, and he's on CNBC every other week, I think. He's very vocal against the Fed hike and that fast and that quickly and everything. Anyway, so he's been saying that you got to wait 12 to 18 months before the real estate until you see an impact on the real estate. And since the first rate hike in March, so we are a year and 2 months, so 14 months. So yeah, hopefully in the next 4 months, we're going to see a crash. Something has to break. So hopefully this is going to be a real estate market.
Something has to break. That's right.
Yeah, something has to break. I don't know what. That's the thing. We'll see. But it makes me believe that, the other countries like China, India, and that's why it would be interesting to get British. But China, India, and even Japan, they started to print money again. And China is getting a lot of support, a lot of countries around the world to switch to the yuan, which is as shit as the US dollar, maybe worse, most likely. But they're faking all the numbers, like the US, but China even more. So it's not ideal, but it feels like it's like an economic war, a currency war between the West and the East, like EU and US and Canada, having a specific kind of policy, and whereas the East is, China specifically, is just like, it's fucked up. All right, that's gone.
Yep.
Anyway, so I don't know what's going to be the bottom, but we will see.
Yeah, no problem. You enjoy Playa del Carmen. I'm about to end the stream, man. I love that. I love that city. I love Mexico in general. I love Cancun. So I'm jealous because, I wish I was there right now. But you enjoy yourself. You and your wife are there, or you just you?
I'm with my wife. Yeah.
Okay.
Are you going to be at the Bitcoin conference later this month?
I am going to be there, but I'm not going to be inside the conference. I'm going to be in Miami though.
All right, I'm going to be there down the street for me. So
nice. Shoot me a DM and we'll link up.
Yeah, definitely. Cool, man. Have a good one then.
You too. Take care. Nice to meet you. Enjoy your vacay. Are you there on vacay, or you just up?
I work from everywhere, so.
That's right.
Cool. All right. Have a good one.
All right. Take care, brother.
Cheers, Chris.
Peace. All right, everybody. With that being said, we just saw the Fed speak. We talked a little bit about a couple of different topics and subjects. Looks like Bitcoin's going to pump because VWAP is turning up. We got money flow coming up. We have momentum waves coming up, and we have a green dot. But we could still come back down. We're underneath these all three of these moving averages as well. So we'll see how this plays out. Stack some Bitcoin, guys. Head over to swanbitcoin.com/Bitcoin Chris. And we'll see you guys on the next stream. And make sure that you go to my YouTube channel, youtube.com/@Bitcoin Chris. And like, share, subscribe, and stay tuned for more content. You guys have a beautiful, happy hump day. We'll see you guys later. Peace.